Good day, students. Once again, I will be doing with you the review question 4.1 and for you to understand in details or easily understand what I will be teaching in this review question, it is advisable that you first listen to the video on the review question 4.2 because it will give you more details and clarity in terms of what I will be doing, and the questions are very similar. But please start with the review question 4.2 before you come to 4.1 because 4.1 has some hidden questions or workings, but 4.2 everything is revealed. So now go to 4.2 first, then after you come to 4.1 so that you get more clarity before you do 4.1. Sain Products Ltd, a new manufacturing business, started production on the 1st of January. Sales are planned to start in February and to be as follows for the rest of the year. So now, though the production will start on the 1st of January, but the sales will take place on the month of February. So now it means the sales that we see here as 400 in the month of February was the production of the month of January. That means the sales of the current month is the production of the previous month. That's what this means. It means sales of this month is production of previous month. Sales of this month equals production of last month. Sales of this month equals production of last month. So now that's what this sentence means. So now this becomes very important in this question because everything will be tied up in the fact that the sales that we see and the sales for the respective months are the sales for the previous month. The sales, let us say the sales of November of 500 is the production of November. The sales of this month of 600, which is the month of April, is the production of the month of March. So now, as you can see, it's very interesting question. Take this into account. Then now we are given the sales in units from the month of February until the month of December. So now these are their sales. Then we continue on that same note. And they say the selling price per unit is 100 Rand. So now when we calculate our sales revenue, we just have to multiply by 100, multiply that by 100, multiply that by 100, and that will give us the sales for the respective month, sales for each month in total. Then after below, they give us information that continues, and it says all sales will be made on credit. So now that means all the sales that we see in the information given, which is in this case it will be 400 times by 100, and this will give us 40,000. That means they are telling us that the 40,000, the 50,000 are all on credit. Here it will be 60,000, and here it will be 70,000, and here it will be 80,000, and here it will be 90,000. So now all these sales that we see were the sales that we made on credit. So now these are the total sales, and I have recorded them already, and we'll use those workings as we progress with the question. They further say that the business plans to offer a cash discount of 2% on the amount owed, and it is only to those customers who pay by the end of the month of sale. That means if you buy, in this case, they are under the assumption that the sales will take place at the beginning of the month, and they will all be sold, all the units will be sold at the beginning of the month. Then by the end of the month, then if the customer makes a payment, therefore now 2% of the discount will be granted to that customer. And they say customers for half of all units sold are expected to qualify for the discount. That means only 50% of the customers will will pay their account on the end of the same month of sale. So now if it's only half, which is 50%, therefore now only half of the sales will be entitled to a discount of 2%. And they further say that for the remaining half of the units sold, which is another 50%, customers for 95% are expected to pay during the month following the month of sales. That means half, or the remainder, which is the half of the units that were sold, will be paid in the month following the month of sales. And they say only 95%, and the question is, why only 95%? It is because they say the remainder is expected to be bad debt. So now that means out of the half, only 95% will be received. Therefore now the rest of the 5% will be a bad debt or a credit loss. So now that is why of the half that will pay 1 month later, then there will only be 95% of them, because 5% of the half of the remainder will be a bad debt. So we'll do that when we do our trade receivables budget or calculating the debtors collection. Then after, it further says that it is planned that sufficient finished goods inventories for each month sales should be available at the end of the previous month. So now it means we need closing to be equal to next month production. That's what it means. It means closing is equal to next month production. That's what this means. Closing is equal to next month production. Sorry, it's equal to next month's sales, not production. Closing inventory is equal to next month production. So to sort next month's sales. So now that means the closing inventory should be equal to the sales of the next month. Yes, closing inventory is equal to the sales of the next month. Then after, they say now raw material, because we are done with the units that are finished in terms of the opening balance and the sales. Raw material purchases will be such that there will be sufficient raw material inventories available at the end of each month, precisely to meet the following month planned production. So now, in other words, once again here, they are saying in simple words that closing raw material should be equal to next month production. Closing means it will be equal to next month production. So now that is what this simply means. So now closing is equal to next month production. That means our closing should be equal to the production of next month. Then that means the production of next month is equal to closing stock of the previous month. It's the same thing, you can call it in a reverse. This planned policy will operate from the end of January. Purchases of raw material will be on 2 months on credit. That is, buy in month 1 and pay in month 3. That means payment of our creditors or payment of our suppliers will be 2 months after the month of sale, will be on the second month after the month of sale, which they say buy in month 1 and pay in month 3. That means 2 months after the month of purchase, our creditors or suppliers will be paid. The cost of raw material is 40 Rand per unit of a finished product. So now the cost of raw material, it is per unit, not per kg. So now we just need to know the number of units. Therefore now that will be multiplied by to get to the total cost of the material. Then they give us the direct labor cost, which is variable with the level of production and is planned to be 20 Rand per unit of a finished product. That means that will be our direct labor cost. Then they say production overheads are planned to be 20,000 in each month, including 3,000 of depreciation. Therefore now we know that depreciation is a non-cash item. We just have to say 20,000 less 3,000, so that we get to 17,000, and 17,000 will be the production overheads, excluding the non-cash item, which is depreciation, because depreciation is a non-cash item and we don't record non-cash items under the cash budget. Then again, we have non-production overheads, and this non-production overheads is 11,000. Then we have to subtract 1,000, and if we subtract 1,000, we'll be left only with 10,000, and 10,000 will be the non-production overheads that will be recorded in the cash budget for this period. Then after, we have variable non-current assets, which costed the company 250,000 rands, and this will be bought during the month of January. So now it means this will be recorded as outflow of cash in the month of January. Hence they say, except where specified, assume that all payments take place in the month as the cost was incurred. So now it means they are confirming and telling us that the 250,000 rand will be paid in the month the cost was incurred, which is the month of January. Then after, now we are given the requirements, and the requirements are not very specific. And in the requirements, it says that draw up a cash budget for 6 months starting from the 1st of January to the 30th of June. In Excel spreadsheet, obviously I will not be doing Excel, but I will do it manually, and you'll see all the calculations for each month. Then the budget should, among other things, show each end of month cash budget. Therefore now they say show all workings. Show all workings. Take note of that. So now we have to show all the workings that are relevant to do this cash budget. So now, before we do the cash budget, which is required, before we do this, we first have to start with all the workings, because the workings will help us to answer the cash budget. So now I will do all the workings to answer the question of the cash budget. So now, before we start with the cash budget, we first have to do the workings. So now in the workings, we have to start with the finished inventory budget. Workings, we start with the finished inventory budget. That's where our workings start. Finished inventory budget. Finished inventory budget. Finished inventory budget, because we need to know the sales and the production and the closing stock. Finished inventory budget, and this is in units. This is in units, where we start with the month of January. We have February. We have March. We have April. We have May. And we have the last month, which is the month of June. So now we record all those in this table format. March, we have April, we have May, then after June. 6 months is there. So now we start with the opening balance of the inventory. Then we will have now the next part after the opening, as you know, that will have production. We'll have production. Then we say production. Then from production we'll have sales. Then we'll have sales, and remember, sales is less sales, which is negative. Then after, we get to the closing stock. Closing stock, we draw a line here as usual. Then we can draw lines in between so that we are very clear of where the amounts are recorded. So now here is our finished inventory budget, and it is in the table format always. There is no opening inventory in the month of January, but there was production in January. Remember, we said that sales which are given in the information, sales that we see here, our sales is 400, 500, 600, 700, 800. Here the sales 4, 5, 6, 7, 8, 900. All these sales are the production of the previous months. I did make mention of that. Whatever you see as 400, these are the sales of the month of February, but it is the production of the month of January. So now why is that the case? Is because it was stated that the business will start production in January. However, sales are planned to start in February and to be followed or to be as follows for the rest of the year. So that means we produce in this month, we sell next month. Produce this month, we sell next month. That's what this simply means. So now let us first record the sales, then we also record the production. So now our sales are starting in the month of February. There are no sales in January. We start in February. But there is production in January, which is the sales of February. So now our sales, they go as follows. We have our sales as 500, 600, 700. They start here 500, 600, 700, 800, and 900. So now these are the sales that we have: 5, 6, 7, 8, 9. There is, okay, so it's 4, 5, 6, 7, 8. You start from 4, not from 5. So now we start from 400, 500, 600, 700, and 800. So now these are our sales: 400, 500, 600, 700, 800. The last one will be 900. So now sales of this month, as I mentioned to you, sales of this month is equal to production of next month. Let me write that for you once again, although I did write it previously. Sales of this month is equal to production of last month. Sales of this month equals production of last month. Equals production of last month. So now that means production for the month of January was 400. And here production will be 500. Here production will be 600. Production will be 700. Production will be 800. And production will be 900. Why? Because the sales of the next month would have been 900 rands. So now this is the 900 we're talking about, which is the sales for the month of July. Sales of July is the production of the month of June. So now that's where this is coming from. That is why I have 900 as the production of June, which is the sales of July. Then after now, there was no opening, then units available for production will be 400. Then there were no sales this month, therefore now closing will be 400. So now we go to the next part, then you say closing becomes opening. Therefore now whatever we close with here will be the opening in the next month, and that opening will be 400. And from that 400 we continue, we say plus that, it will give us 900. And 900 will less our sales, because our sales are in brackets. Sales are reducing the number of units that were produced and available for sales. Then 900 minus will less now 400, that will give us 500 as the closing. And if you see, I said that closing, okay, closing in this case we have closing of 500, and that becomes opening in the next month of March. Then that will be 500 in the next month of March. Then we continue and we say 600 plus 500 will give us 1100, less 500, that gives us 600. Then from 600 we record the opening, and the opening will be 600. Then 600 we add 700, this will give us an amount of 1300. 1.3 less 600 will give us 700. Then 700 becomes opening balance, and opening balance will be 700. Remember, all the opening balances, they are coming from here. Here the closing balance becomes an opening balance, closing balance becomes an opening balance, closing balance becomes an opening balance of the next month. So now that's where all these are coming from. So now we have recorded that opening balance. Then 700 plus 800 will give us 1500, and we less 700, it gives us 800. And 800 becomes an opening balance in the next month, which is the month of June. Then we say 800 plus 900 will give us 1,700. Less 800, it will give us less 800, then it will give us 900 as the closing units. So now this one is complete, is done, and it is dusted. So now we can continue to the next budget. The next budget after this will be raw material budget. Raw material budget. Raw material. Remember, the purpose of this budget was for us to know the production, for us to know the sales. That was the very key part for this budget. Raw material budget, and the raw material budget will be in units or in quantities. In quantities. So now we say in quantities, which means in units. So now we do the same thing. This budget will start in the month of January, and we have the month of February, we have the month of March, we have the month of April, we have the month of May, and the last month will be the month of June. So now we draw, there will not be enough space, or there is still space. So now there will be 6-month budget, again 6-month budget, with draw lines in between, and with draw lines in between, and with draw lines in between, and with draw lines in between. So now here is our raw material budget, which start with the opening balance. Then after we'll have purchases, because we purchased raw material from our suppliers. We want to know how much material was there, and how much material was purchased during the year, and how much material was used in production, and how much material is left at the end of the year. Then after we'll have production. Then after we'll have the closing material. Then after we'll have closing. Then now we have to check how much is the closing material at the end of this period. So now we start with the opening, and there was no opening. Production, there was production. In this case, we don't have to convert any units into material cages, because we are already given everything is the same. Units are equal to the cages. So we don't have to say the number of units, multiply that by the number of cages per unit to get to the total quantities of material. We don't have to do that. So now our purchases, in this case, we have to go and check how do we do our purchasing. How do we do our purchasing? But we are aware of the fact that there was instruction or information that gave us the details in terms of how purchasing are taking place. So now under the material, in this paragraph of material, then we have to check what was said about the material. It was said that raw material purchases will be such that there will be sufficient raw materials inventories available at the end of each month, precisely to meet the following month planned production. So now when we buy, we have to make sure that by the end of the current month, there is sufficient material that will be equal to the production of the next month. Remember, production now, it is only in the finished goods budget. So now we have to be also speaking to that budget. So now in this finished goods budget, we had production. And production here is the production. So now they say under the raw material budget, we have to make sure that by the end of the year, that means the closing must be equal to production of next year. So now we already know that closing of January should be equal to the production of next year and the production of next month. And the production of next month is 500. So we already know that production of the month of February is 500. And that production must be the closing of January. So we already know that closing must be 500 here. And we also know that closing becomes opening. Therefore, now this closing will be opening of 500 in the month of February. Then now we also know that closing of the month of February should be equal to production of the next month. So now production of the next month, which is production of the month of March, must be the closing of the month of February, which is 600. So now that 600 will become the opening in the next month of March, because closing becomes opening. This is closing, it becomes opening. This month closing becomes opening. Then now we go again. We say production of the next month should be equal to closing of the previous month. Production from the finished goods budget. Then we take that 700, then we make that the closing of the previous month, which is 700. And closing becomes an opening. Therefore, now that 700 will have to be an opening in the next month, which is 700. Then we check production of the next month. And production of the next month is the month of May. And production here is 800. And that 800 will have to be the closing of the previous month, which is the month of April. Therefore, now closing becomes opening. Therefore, now that will be written as opening there. And that opening will be 800. Then after we check for the production of the next month, which is production of the month of June. And production of June must be the closing of the month of May in the material budget. So now that will be 900 here. Therefore now it will be opening of the month of June. That will be 900 opening. Closing becomes opening of the next month. Therefore now we need to know the production of July. And the production of July, we'll have to get that from the table information that is given here. Production of July. Production of July must have been the sales of August. Remember, the sales of August is the production of July. So now that means the production of July was 800, which is the sales of August. So now production of the next month, which is July, is 800, and the production of the next month, which is July of 800, should be the closing of June. Therefore now it means it will have to be 900 here as closing. Therefore now this closing becomes opening in the month of July, but we are not doing July, we are only stopping in the month of June. So now that's where everything stops so far. Then we'll do all the calculations from now. So now we continue in that same note. So now we have recorded the closing and the opening based on the statement that was given to us here. So it was based on the statement that said that raw material must be purchased such that it is exactly equal to the closing is equal to the production of the next month. So now it was based on this sentence. Then now we continue on that same note. Then we have to record now everything. We have to record now what? Purchases. So now we have to know how much should be purchased here, so that at the end we have 500 as the closing. That should be our consent now. How much should be purchased here, so that at the end we have 500 units. So now it means in this case our production, our purchases for the month of January should be equal to production of January and February. Only in the case of January, that means purchases should be equal to production of January and February. And production of January and February, it is here 500 and 400. So now that means our purchases should be an amount of 900. So that we have 900 here. Then after when we deduct our production for the current month, remember our production for the current month, it is again given. Here we do have productions for the current month. Here are the productions for the current month. So now we take all this production for the current month, we record it in the month they were produced. So now here we have 400, which is negative. Here we have 500, which is negative. Here we have 600, which is negative. These are the production as they are. We don't do anything, it's just production. Then this will be 800 and this will be 900. Production, you copy and you paste them as they are. This is the production from the finished goods budget as it is. So now we have recorded that or taken that into account. So now what we must do is just to add and we see what else to do. So now we continue and we say, okay, we have recorded all the production. And I said we must purchase such that after we purchase, the closing balance must be 500. It means our purchase should be equal to the production of the 2 months, which is equal to 900. So that when you say 900 less 400, we are left with 500. And 500 now, remember, is the closing, which is equal to the production of the next month. Remember, 500 is equal to the production of the next month, and this is the production of the next month. So now that is why we are doing that purchase as it is in this first scenario. So now we say, okay, we must do now the purchase for the month of February. Now in this case, let me bring your attention into something very important. So now purchases, this is another statement that is very important. Purchases is equal to production of this month. Is equal to production of this month. Purchases is equal to production of this month. So now this is how you must take this question. Why purchase is equal to production of this month? Is because at the end, remember, we need to get to the closing of 600. So now if you say, okay, how much was the production of this month? Production of this month is 500. So now it means if production is 500, then our purchases should be 500. So that when we say 500 plus, okay, our purchases should be not equal to, should be our purchases, okay, let me just confirm that it was this sentence. I think I'm getting this not right. They said raw material purchases will be such that there will be sufficient raw material available at the end of each month, precisely to meet the following month planned production. Okay, then it means here we say production is equal to purchase is equal to production of next month. Purchases is equal to production of next month, not this month, of next month. Purchases is equal to production of next month. And the production of next month is 600. Here is the production of next month, 600. So now our purchases will be 600. So that here we have 1,100. And when you say 1,100 less 500, we are left with the closing of 600. So now my statement is correct. That means purchases is equal to production of next month. And here our purchases will be equal to the production of next month. And here the production of next month. Therefore now it means it will be 700. And if you say 700 plus 600, this will give us 1,300. And if you say 1,300 less 600, this gives us 700, which is the closing. That is exactly how things are supposed to be. And now closing, remember, it is equal to production of the next month. So now we are really on track with that. Sorry for the little mistake. Then after now, remember, purchases is equal to production of next month. And therefore now production of next month, here is the production. Production, the next month will be the month of May. Therefore now this will be the purchases of this month. So now we record that as purchases, which is 800. Then 700 plus 800, which will be 700 plus 800. And this will give us 1,500. So that when you say 1,500 less 700, that will give us 800. 1500 less 700. This gives us 800, which is the closing. And the closing, remember, it has to be equal to the production of the next month. So now everything is still tied up together and it is correct so far. Then after, now we record purchases of the month of May. And the purchases of May, remember I said purchases equal production of next month. And production of next month is 900. Therefore now purchases will be 900. So now we continue on that and we say 7 plus 8, sorry, 800 plus 900 will be 1700 minus 800, and this gives us 900, which is exactly the closing that we have already calculated. So now we continue on that same note and we say, now we have to do now the production of the month of June. Remember, production of June is equal to, sorry, purchases of the month of June is equal to production of the next month. So now we need to know the production of the next month. And production of the next month should be the production of the month of July. Production of the next month, which is the production of July. Production of July, we said it will be 800 because production of July is the sales of August. The sales of August is the production of July. So now we said production of July is 800. Therefore now production of July, which is the next month, will be the purchases of the current month. Therefore now that will be 800, and 900 plus 800 will give us 1700. So now if we have 1.7 less 900, this gives us 800 as the closing. So now that was a mistake there. So now here we'll have 800, not 900. So I could have done a mistake. Yeah, it was a mistake because we know that the production is 800. So now it was supposed to be 800, not 900. Sorry for that. And now you see my calculations are correcting myself automatically. So we continue on that same note. So now we have taken this into account. Then we can go to the next budget. And the next budget now will be the raw material budget in financial terms. Raw material budget in financial terms. Raw material budget in financial terms. So now we are doing raw material budget in financial terms. Raw material budget in financial terms. The raw material budget in financial terms, we have done that in review question 4.2. Raw material budget. Raw material budget in financial terms. In financial terms. So now we start again with the month of January. We go to February. We go to March. We go to April. We go to May. And the last month is the month of June. So now after we have recorded this, preferable to draw lines so that things look a bit neater than before. Draw lines in between for the budgets. And the question of budgets, guys, is very important. You can be asked, or you will be asked any budget in your exams. And this question can be out of 10 marks or even more than 10 marks. Preferably, I'm sure it will be more than 10 marks. Opening. Then we do the same thing after the opening. It will be the purchases. Nothing has changed. Purchases. Then after the purchases, it will be a line here always. Then after we'll have production. And production is less production. Then after we'll have closing. Then after we'll have closing. We'll have closing. So now when it comes to this budget, there is nothing new that we are doing, guys. Everything that we are doing is from this budget. The only thing that we do, we take the raw material budget in quantities. We multiply it by the cost of the material per unit. And the cost of raw material per unit was given to us as 40 rand. The cost of raw material per unit is 40 rand. So this is the amount that we multiply with. Take that into consideration. So now we multiply every unit by 40 rand. So it will be times that by 40, times this by 40, times everything by 40, times everything by 40, times everything by 40, multiply everything by 40, multiply everything by 40. We multiply everything by 40, multiply everything by 40, multiply it by 40. Very boring stuff, I know. Multiply everything by 40, but we multiply everything by 40, guys. We have to multiply everything by 40 so that we get to the value of the raw material. Because we are only given the quantities or the units. We need the price now of the opening, the price of the purchases, and the price of the closing. That is why we multiply everything by the 40 rand, which is the price of the material or the cost of the material. So now after we multiplied everything by 40, then this will give us the value of the material. So now I'm doing this so that you see where the calculations are coming from when I am giving you the amounts. So now here we come and we do the calculations now here. So now when I do the calculations, I want to show you where the amounts are coming from so that you are reminded. So now this is the table that I've multiplied everything by 40 with. So now here we have the table. At least you will all see how to calculate everything. So now we don't have the opening balance, then we'll have 900 by 40. Please confirm all the calculations. 900 by 40 will be 36,000 here. Then we'll have 36,000, which is this 900 by 40. Is the one that we're talking about. It will give us 36,000. Then after we will have 36,000. This is in rands, guys, don't forget. And production for this month, there was less production, and production would have been 4 tons by 40. That will be 16,000, and 16,000 less 36,000 will give us a total of 20,000 rands. So now all we did was just to say 40 times by 900, that gave us 36. Then after we said 400 by 40, that gave us 16 less 36,000, then that became 20,000. So that's where the 20,000 is coming from. Then closing becomes the opening, don't forget. Closing value of the material becomes opening value of the material. Then after we say 6 times, in other words, we could have said here 5 times by 40, and 5 times by 40 will be 20,000, which is the same 20,000 that we have recorded here. So now everything is still correct so far. So now we continue on that same note. Then purchases were 600, then we'll have to say 600 by 40. 600 by 40. Then this will give us 24,000. And we'll have 24,000 here. Then 24,000 plus 20,000 will give us 44,000. 44,000 less 20,000. Then we less 20,000. Where's 20,000 coming from? 20,000 is 500 times by 40. That will be the 20,000 that you see here. So now we'll say 44,000 less 20,000. That will give us 24,000. and 24,000 will become an opening balance. 24,000, and that 24,000 could have been recorded as 6 times by 40, and 6 times by 40 will still give you the same opening balance of 24,000. Then after we say our production is 700 times by 40, then we say 700 by 40, we multiply this by 40 and it gives us 28,000. Then we record 28,000. Then after 28,000 plus 24,000 will give us 52,000 rands. It will give us 52,000 rands. And we record production, and our production is 6 times by 40, and 600 by 40 we already know that it is 24,000. So we say less 24,000, and the closing will be 700 by 40, which is the same as 52,000 less 24,000. 52 less 24 is the same as 28,000. So now that will be 28,000, and 28,000 becomes an opening balance, and it will be 28,000 opening balance in the following month, and that 28,000 could have been 7,000 by 40. 7,000 by 40 is the 28,000 that you see once again. So now we record production for the current month, and the production for the current month is 800 by 40. Yeah, it is 800 by 40, and 800 by 40 it will be 800 multiply that by 40, and it gives us 32,000, and 32,000 is the production of the month of April, and 28 plus 32 will be 60,000 rands. Then we go to the production of the current month, and production of the current month is 700 by 40, and 700 by 40 we already know that it is 28,000. And 60,000 less 28,000 will give us 32,000 rands. It will be 32,000 rands. Then closing will become an opening, and the opening will be 32,000 rands, which is this closing is transferred to become an opening balance. So now that will be 32,000 rands, and beside we could have just said 800 times by 40. That will give us the same 32,000 rands. Then after we continue again, we say okay, we have to record now production of the current month, and production of the current month is 900 times by 40. Then we calculate that 40 by 900, it will give us 36,000, and this will be recorded as 36,000. And remember, all these amounts are in rands, and 36,000 plus 32,000 will give us 68,000 rands. And 68,000 rands, we have to subtract production, and production is, our production is here, production is 800 by 40. So now 800 by 40, we already know that it is 32,000 in the month of May. 32,000 rands. Then now 68 less 32, 68 less 32 will give us 36, and this is 36,000 for the month of May. Then after 36,000 will be an opening balance. Then we record production for the current month, and production is 800 by 40, and we already know that 800 by 40 is 32,000, and 32,000 by 36,000, or adding 36,000, will give us the same 68,000. And production of the current month is 900 by 40. Then we have to check that 900 by 40, it will give us 36,000. Therefore now we say we record 36,000. We record 36,000. We record 36,000. Therefore now 68 less 36,000 will give us 32,000 rands. So now I've shown you all the workings and I've shown you all the calculations. So now with that being said, it means this budget is complete, or it is done now. So now let us just erase all that. Then we go to the last budget for the workings, or it's the last two budgets for the workings. The next budget will be trade payables budget. Then we do trade receivables budget. Trade payables budget. Trade payables budget. Our trade payables budget will also be for 6 months: January, February, March, April, May, and June. We start with the opening balance. Then after we do our purchases, because we purchase from our suppliers who are called trade payables. Then after we draw a line always. Then after we have payments, because we have to pay our suppliers at the end of the day based on the agreements. Payments, this is the payment of suppliers. Then after we'll have the closing balance after the payment has been recorded, or after the transaction of the payment has been recorded. So now from here we can check or do the budget for our trade payables, so that we check how the payment will be and how much will be the balance at the end of the period. So now there is no opening balance, and we were told that we are buying from our suppliers on credit. So now if we buy on credit from our suppliers, we first have to know how do we make the payment. It was stated that purchases of raw material will be in 2-month credit. That means we pay 2 months after the month of the purchase. And this will be buy in month 1 and pay in month 3. So now they are telling us the policy with regard to the payment of the creditors, which indicates that we buy this month and we pay 2 months after the month of the purchase. So now remember, I told you that we are purchasing where we are purchasing in this budget. This is where the purchases are taking place. This is where the purchases are taking place. These are the purchases that we have done during this 6-month period. Purchases, and all these purchases are on credit. This is the column for purchases, the one that I'm circling. So now this is where we did the purchase, and all these purchases are on credit. And the purchase of 36,000 will be paid in the month of March. And the purchase of 24,000 will be paid in the month of April. And this will be paid in the month of June. So now that will be like that, because purchases are paid, or suppliers are paid 2 months after the month of purchase. Meaning if we buy in January, we skip 1 month and we pay in the 2nd month. So now this will be where the payment take place. And for this, we skip this month and the payment will take place here. So now we have to record that in our budget that we're busy with at this moment. So now opening balance, there was no opening balance regarding the trade payables. If there was opening balance of trade payables, that will be recorded here. But we have to record the purchases, just the purchases as they appear in the purchases of raw material budget. Therefore now we'll have 36,000, which is exactly as they are. All these purchases, we record them as they are. And this will be 24,000, and this will be 28,000, and this will be 32,000, and this will be 36,000, and the next one will be 32,000. So now these are the purchases that took place in the respective month as we have done that. So now if there was only one purchase in the month of January, therefore now this will be the total of the trade payables, and there was no payment in that month because we pay in the 2nd month after the month of the purchase. or 2 months after the month of purchase, or in the 3rd month. Buy in month 1 and pay in month 3. That's what they explained it like that. Buy in month 1 and you pay in month 3. So now the closing balance will be 36,000. And now closing balance becomes opening balance of 36,000 here. So now before I go there, remember, the purchase of January will be paid in March. So now the payment will be the payment in the month of March. So payment here will have 36,000, which is 2 months after the month of the purchase. Then here we'll have 24,000. Here we'll have 28,000. And here we'll have 32,000. So now this will be the payments that take place with regard to these transactions. So now we record all the payments in the month they're supposed to be recorded. So now we have recorded all these payments respectively. So now remember, also in the month of February there will be no payment, because we pay in the 2nd month after the month of the purchase. Or you buy in month 1, you pay, you cycle, or you pay in month 3. So now 36 plus 24,000 will give us 60,000. And there was no payment, therefore now 60,000 will be the closing. 60,000 will be the closing balance. So now we'll have 60,000 as the closing balance, and closing balance becomes an opening balance. Therefore now this will be 60,000. Then after we say, oh sorry guys, the payments are under the payment column. 36,000, not where they are. 24,000, 28,000, 32,000. I just recorded them in the wrong column. Otherwise all the amounts are correct and they are recorded in the right columns but in the wrong row. Therefore now we record all the payments, and remember the payments will have to be negative because they are reducing what we owe to our suppliers. So now we say 60,000 plus 28,000, that will give us 88,000. So now we'll have 88,000 here under the month of March. 88,000 less the payment, which is the first payment of 36,000, and this will give us 52,000. And 52,000 becomes an opening balance in the next month, 52,000 rands. Therefore now we say 52,000 rands plus 32,000, and this gave us 84,000 rands in the month of April. And we say less 24,000, and this will give us 84 less 24 will give us 60,000. I hope you get all the calculations, guys. In fact, I'm pronouncing all the amounts. Then the closing balance of 60,000 becomes opening balance in the next month. Therefore now we'll have 60,000 here as the opening balance. Then after we say 60,000 plus, remember all these amounts are plus, all these are plus. You don't have to write the plus sign, please. I'm just showing you so that you get to understand. Then 60,000 plus 36,000 will give us 96,000. This will be 96,000. Don't want that color. This will be 96,000. 96,000 less 24,000 less 28,000 will give us 68,000. And 68,000 will be an opening balance because it is the closing balance. For every closing balance becomes an opening balance. So now we have 68,000 plus the purchases of 32,000, that will be 100,000, exactly 100,000, less 32,000, that will give us the closing balance of 68,000. So now this will be the closing balance by the end of the month of June. So remember, guys, our focus when it comes to this part, we are focusing on the payments because the payments will affect our cash budget. So this is the focus when it comes to this budget. There was no need for us to do everything as long we know how much was paid in each month. So now this is what will affect our cash budget. The rest will not affect our cash budget. So now the last budget that we'll have to do is the trade receivables budget. The last budget we have to do is the trade receivables budget, which is the last workings before we can do our cash budget. So now we are doing trade receivables budget. Trade receivables budget. And our trade receivables budget is also for 6 months. Nothing has changed. For the month of January, for the month of February, for the month of March, for the month of April, for the month of May, and the last month is the month of June. So now here is the 6 month again. We start with the opening again, and we add our sales because all the sales are on credit. Then we add all the sales that we made. Then after we draw the line again. Then we can also draw the lines here in between at any time. Draw the lines here in between. Draw the lines here in between. Draw the lines here in between. Then after we'll have to less cash received, because our customers will have to pay us back. So now cash that will be received will have to be deducted. Then after we receive the cash from our customers, then this will be the closing. Cash received will be negative because it reduces what our debtors or receivables are owing us. Obviously, whenever you pay your account, you expect that your account should decrease. So that's what exactly is happening here. There is no opening balance, and there were no sales in the month of January, and there was no cash received in the month of January throughout. Why that the case is because our sales are starting in the month of February. So if they are starting in the month of February, there is nothing to be sold. Sales started in February, so there were no sales in January, and there was no opening balance that will be paid in the month of January. So now it means when we are in the month of February now, the opening balance will still be again 0. But there were sales in the month of February. So now let us check the month of February. Let me just extend this because I will need more space here. I will need more space here. It's fine. But my closing must be here at the bottom because I will need to split my debtors. I'll need to split my debtors into 2. So now I want to record here and record here separate, then we'll have closing here. Let me record my closing here. You'll see what I'm doing is important for this exercise. When you come to cash receipt from our customers, there was a policy regarding the payment of our customers. The policy stated that the policy said that the business plans to offer cash discount of 2% on the amounts owed to those customers who pay by the end of the month of sale. That means some customers will get a discount for paying in the same month of the month of sale. However, they further told us that customers for half of all the units sold are expected to qualify for the discount. That means only half of the sales will be paid in the month of sale, and that means that half will be entitled to a discount of 2%. Therefore, now they are telling us that for the remainder or for the remaining half of the units sold, that means the half of the other units sold, customers for 95% are expected to pay during the month following the month of sale. That means of the half of the remainder, then the remainder of the half is only 95% that will be paid. Why? Because the 5% will be a bad debt, or the 5% will be irrecoverable, or the 5% will never to be paid because maybe the debtor is disappeared or was declared insolvent or was declared liquidated or sequestrated. So now it means we have to pay half of what was, customers will pay half of what was sold to them in the first month, and the discount of 2% will be given, and only 95% of the second half will be received in the following month, and the rest will be bad debts. So now we are recording our cash received from customers in two areas, or in two ways, where we record current month and for the period. We have to record current month, that means money received for the sales and for the payments of the current month. So now we'll have current month, then after this is the period. Current month or second month. Let me say second month. Current month, or then after we'll have second month. So now let us go and we record everything. And I was still busy now showing you that there was sales that we made, and our sales started in the month of, only in the month of February. And we said now that our sales that started in February, we have recorded them, and those sales appear here. And in February is 40,000, 50,000, 60,000, 70,000, 80,000, and 90,000. So now let me record all those amounts in their respective month. February we have 40,000 rands. March we have 50,000 rands. April 60,000 rands. May 70,000 rands. June 80,000 rands. We don't do July. So now we have recorded all those. Then after, now remember, there was no payment, closing was 0, opening will be 0. Therefore now sales, our sales are here 40,000. I don't know why I'm making all this mistake. 50,000, 60,000, 70,000, and 80,000 rands. So now here are the sales for their respective months, from the month of February until the month of June. So now here are the sales under the line, or the line or the row of sales. We recorded the sales, all of them, in their respective months. So now opening balance will be 0. Therefore now total will be 40,000. And in the same month, we expect that half of this amount should be received, and a discount of 2% will be granted. So now out of the 40,000, we know that half will pay, which is 20,000. Out of that half, which is 20,000, this will get a discount of 2%. Therefore now only 98% of that amount will be received, because out of 100%, if you subtract 2%, you'll be left only with 98%. Therefore now it means this will be 19,600 that will be received in the first month, which means in the month of February. Then the other half now, which is another 20,000, another half, only 95% of that will be received. Times by 95, divide by 100, and if it's 95%, 20,000 times by 95 over 100. If we only receive 95% of that, it means only 19,000 will be received in the next month. So now that is 19,000 here received in the next month, and 19,600 received here. Sorry for this recording the wrong columns. So now this is the current month. Under the current month, or under the first month, let me just say first month so that it is clear. Under the first month, customers who pay in the first month, they will pay us how much? 19,600. Remember, those who pay us in the first month is half, and our sales were 40,000. So 40,000, half of 40,000 will be 20,000, and those customers will get a discount of 2%. If you want, you can say times by 2 over 100. Then you get 400. Then you say 20,000 less 400. 20,000 less 400. But that is a long way for a second year student. Then you get 19,600. Then after you say another half is 20,000, you say times by 95 over 100, and I've shown you that it is 19,000. So now these are the one that will pay in the second month. When it comes to the 40,000, so now we are done with the 40,000. It means 40,000 less 19,000 here. Then this will give us, there was no second payment. Then this will give us 40,000 less 19,600 less 19,600. This will give us 20,400 rands. It will be 40,000 less 19,600. It will be 20,400 rands. 20,400. Then now we continue on that note. Just confirm 40,000 rands less 19,600. This will be 20,400. Therefore, now that becomes an opening balance 20,400. Then we say 20,400 plus 50,000 of the sales for that month. That gives us 70,400. Then from here now we record the payments, or the receipt in this case, of which we know that out of the sales of March, half of them will pay in the same month. 50,000 divided by 2 will be paid in this month, 25,000, but there will be a discount times by 0.98, discount of 2%. That means only 98% will be received. Therefore, now that will be 24,500 that will be received in the same month. So now it will be 24,500 that will be received in month 1. Remember, month 1. Therefore, now the rest of it, which is 25,000, only 95% of the remainder, they said 95% of the remainder will be paid. Then we say times by 0.95. Then this gives us 23,750. So now that will be received in the next month, 23,750. 23,750. That will be received in the second month of after the month of purchase. So now we have recorded all of that. Then we continue and we say now 70,400 less 24,500 less 19,000 rands. Then this gives us 26,900. It gives us 26,900. 26,900. Then closing balance will be the opening balance, 26,900. Then after we continue on that same note and we say now, okay, the sales for the month of, just make sure that is clear, 24,000. The sales for the month of April, half of that will be paid in the same month. Here are the sales. The sales for the month of April, half of this will be paid in the same month of April, with a discount of 2% being granted to our customers. So now half of 60,000, we have to take that into consideration. So now let me just make sure that I manage this very quickly. So now while we are still busy with that, we have to take into account the fact that half of this will be taken into account. Just want to make sure that I remove this so that we are sorted out in terms of the space. Sorry for that. So now thanks for that. Then we still continue on that same note. The space is full now. We just have to delete one file so that we have enough space to record. Then we continue on that same note and we say half of the sales of the month of April will be paid in the same month. So now what do? We say, okay, if it's half, it will be 30,000, because half of 60,000 is 30,000. Then we say that 30,000 will be paid and a discount of 2% will be granted. Therefore now only 98% of that will be received, which gives us 29,400, and 29,400 will be paid in the same month, which is under month 1. That will be 29,400, and the rest will be paid in the next month, and only 95% of the remainder of the half. So now out of another 30,000, only 95% of that will be paid, and which means it's only 28,500 that will be paid in the next month, because 5% would be bad debt or be a credit loss. Therefore now we say 60,000. We'll say 60,000 plus 29,600. 60,000 plus 29,600. This gives us 89,500. 600 in fact. 89,600. Confirm 26,900 plus 60,000 give us 86,900. 86,900. Then we continue in that same note. Now we say 86,900 minus 29,400 less 23,750. Then this gives us 33,750. 33,750. 33,750. 33,750. Then that becomes an opening balance 33,750. Then after we say once again now 33,750 plus 70,000, which is the sales for this month. Then this gives us 103,000. 103,750. Then after we say okay, out of the sales of the month of May, half of that will be paid in the same month, and a discount will be granted, and the discount will be 2%. So now we say 70,000. We divide that by 2. Half of that will be paid in the same month, and they will be given a discount of 2%, meaning only 98% of this amount will be received. Therefore now that means 34,000 will be received in the same month. 34,000 will be received in the same month. So we acknowledge that it is 34,300. It will be 34,300 and 34,000. Not twice, 34,300 only in the first month, and another half, which is 35,000, because half of 75,000 is 35,000. Another half will be only 95% of that be received. Only 95% of the half will be received, or 95% of the remainder will be received in the next month. The rest will be bad debts. Therefore now this will be 33,250. 33,250 will be received in the next month. Therefore now we continue recording that, and we say 103,750 less 34,300 less 28,500. This will give us 40,950. It will give us 40,950. 40,950. And it will be 40,950. Then now we just close this budget before the last budget. 40,950. Then we say plus 80,000. This gives us a total of 120,950. Then I will say, okay, out of the sales of 80,000 for the month of June, half of that will be paid in the same month, and a discount of 2% will be given. And 80,000, you divide that by 2, which is half, you get 40,000. And you say out of the 40,000, only 95% of that will be received. Therefore, now only out of the 40,000, only 98% of that will be received. Therefore, now that will give us 39,200. So now 39,200 will be received in the same month as the month of sale. So now let us record that as 39,200. 39,200. Another 95% of the half will be received in July, and we don't do the budget for July. So the 95% of the half will be received in July, so we don't have to record that because it's outside the budget period or outside the scope of our budget. Therefore, now we say 120,950 minus 39,200 and minus 33,250, and this gives us 48,500. This gives us 48,500. Now in this 48,500, then this becomes our balance. So now let us deal with this column, these two columns, because these are the very important columns. Let me just use a different color of the pen. These two columns, these ones, are the one that we are focusing on, because this is the payment of our customers, or the cash received from our customers. This is our forecast, and this will affect our cash budget. It's only this part that will affect our cash budget. We'll have to record that as cash received from customers. So now we have to do the requirement now. This is what was required to do a cash budget. The rest were just the workings. So now we start answering the question. Cash budget. And our cash budget is for 6 months, starting in the month of January, the month of February, month of March. We have April, May, and June. So now we start with the inflows of cash, all the money that came in. So now let me just add something so that when you are looking at the solution, you are not confused. What they erroneously or mistakenly did, they used the same entries that were in the next exercise and they recorded them here, and that was not the case. There is an entry here that is missing, but it appears in the solution, where that entry comes from review question 4.2. This entry where they say the business will raise 300,000 from the issue of shares, and the cash of the issued shares will be 300,000. So now they assume that they said the same thing in the previous one, but they forgot to say that. I don't want you to make a mistake when you are doing this exercise and you confuse with where the 300,000 is coming from. So now this is another question. This is question or review question 4.2, but they forgot in this exercise to record this entry or to give us this entry, and they recorded in the solution as if it was there. So now let us assume that there was a sentence that says issued shares for cash, issued shares for cash at 300,000 or for 300,000 rands. For 300,000 rands. Please take this into account, although it is not there, guys. I know they just recorded that in the solution by mistake. So now they should have made an entry that say the issued shares for 300,000 rands, or that amounted to 300,000 rands. I just want to make a shortcut of that so that we record everything as it appears in your solution. So for January, there are shares that were issued. Shares, and these shares were issued in January. So now that will be the share issue. Proceeds from the issue of shares being 300,000 rands. And there was no other issue of shares. So please don't forget, guys, that I added this by myself. It is not there, but it is supposed to be there. They just forgot to record it. That's why you see it in the solution. Then after, we have now to record the cash that flow in the business because of the receivables or debtors. Then we say debtors, collection from debtors. There is first month and there is second month. There is second month. So now in the first month, it was not in January. In January, there was no cash received. In the month of February, there was cash received from debtors. For the first month, it was 19,000, 624,500, 29, 434, 300, and 39, 200. So now let us record all these entries. I just want to take a screenshot so that I have all of them in one screen. So now let us record all those in our cash budget. So now let me just show you all these entries. So now here is what we'll be recording here for the first month and for the second month. So now in the first month, we record in February 19,600. In February, we record 19,600. 19,000. In March, for the first month, 24,500. 24,500. In April, we have 29,400. 29,400. 29,400. In May, we have 34,300. We have 34,300, and we have also 39,200 in June. 39,200 for the first month. And for the second month, we started in March, which is 19,000. 19,000. In April, we received money of 23,750. 23,750. It was the second month payment. Then we have 28,500. 28,500, and the last one is 33,250. 33,250. 33,250. So now these are the receipts in their respective month with regard to money received from our customers. And from here now we have recorded everything. Then we can have the total of all the inflows. Total of all the inflows. Total of all the inflows for all the month. So now we record the total of all the inflows. Here we'll have 300,000. Let me use a different pen. Here we have 300,000. And here we have 19,000. And 19,600, sorry. And here we'll have 24,500 plus 19,000, which is 43,500. 43,500. Then we'll have 29,400 plus 23,750, which is 53,150. Then after we have 34,300 plus 28,500, and this gives us 62,800. 62,800. Then this is 39,200 plus 33,250, and this gives me 72,450. 72,450. I hope, guys, you will understand all these calculations. It's quite a long calculation, but I try to simplify everything so that at least when you see the solution you understand. But after you have listened to this audio, you'll definitely be fine with everything. So now our debtors, we could have also recorded this as 19,600 here, 43,500, 51,000, 53,150, and 62,800 and 72,450. That is the debtors collection. Then after we do the outflows of money, outflow of cash, and our outflow of cash is the payments to our suppliers, where we pay our creditors. Where we pay our creditors, you can say payments of trade payables or payments to trade payables. Just because of space, I just want to say creditors. Then now when we paid our creditors, we have to check in which budget. We check under the trade payables budget. We check under trade payables budget, and here is the trade pay, and I've already highlighted it for you. Payment was 36,000, 24,000, 28,000, and 32,000 in the month of March, April, May, and June. So now let us record 36, 24, 28, and 32. So now this is what we have to record for our trade payables in terms of the payments. So we record that in our cash budget, and we confirm the amounts to make sure that we have all of them in one screen without any confusions. So now here are our payments to our trade payables: 36,000 in March, January, February, March, 36,000, April 24,000, May 28,000, then June is 32,000. Therefore now this has been accounted for. Then now we go to the next one, which is the labor cost. We paid cost of labor, and the cost of labor was 20 Rand per unit. So now we have to check if was it 20 Rand really per unit, and I think it was 20 Rand per unit. They said to us that the cost of labor is 20 Rand per unit of a finished product. Therefore now we have to go to the production, or the unit that we produced, under the finished goods budget, guys. Under the finished goods budget. This is for the finished production. Therefore we go under the finished goods budget. Then under our finished goods budget, we multiply everything by 20. Everything by 20. And here was our finished inventory budget, or finished goods. This is finished inventory or finished goods budget. If you want, you can say finished goods or finished inventory budget. It's the same thing at the end. Goods is the inventory. So now we have to multiply all the finished units, which is the production. Then that will give us the cost of labor that will be recorded in the cash budget. So now we do that as it is instructed, and to have everything on the same page, once again we check how much was our finished production. So our production in this case, we see there it is 40. It is 400 units. There is 400 units. Then we say 400 times by 20, and this gives us 8,000. 8,000 for the month of January. Then the second production is 500. 500 times by 20. This gives us 500 by 20. This gives us 10,000. 10,000. The next one, it will be 600 by 20. This gives us 12,000. And the next one is 700 by 20, and this gives us 14,000. Then after we have the month of May, which is 800 production. There's 800 by 20, and this gives us 16,000. Then after we have 900 by 20, then we say 900 by 20, and this will give us 18,000. So now with that means the labor payment is completely recorded, and we have done everything with regard to labor. Then after, now we go to the overheads. We had two overheads that were given here. We had overheads. Our overheads, we had non-production. Our overheads were non-production and production. So now let us start with the production overheads. Then after, we had non-production, production and non-production overheads. Our production overheads, I think it was 17,000 throwouts. Why? Because it was 20,000 and we had to subtract depreciation. Production overheads were planned to be 20,000 each month, including 3,000 of depreciation. And I said we have to say less 3,000. And this will give us 17,000. Because depreciation is a non-cash item. And non-cash items are not recorded in the cash budget. We only record cash items here. Therefore, now we'll have 17,000, 17,000, 17,000, 17,000, 17,000, and 17,000. And the non-production overheads amounted to 10,000, because we said our non-production overheads are planned to be 11,000 a month, which include 1,000 rand of a depreciation. Therefore, we said 11 less 1,000, that gave us 10,000, excluding depreciation in each and every month. So now we'll have 10,000, 10,000 rands, 10,000 rands, 10,000 rands, 10,000 rands, and 10,000 rands. So now this will be the non-production overheads. And the last one was the purchase of the fixed assets. Here was the purchase of the fixed assets at the cost of 250,000 rands. And it was in the month of January. So now we record the fixed asset of 250 only in January. Fixed asset, that will be 250,000 rands only in the month of January. So now we have recorded the fixed asset of 250,000. And with that being said, now we can draw a line where we record all the outflows in total for each and every column. All the outflows for each and every column, 250,000. So that we are able to calculate their total. So that we are able to calculate their total. Then we draw a line on top here, and we draw a line on the bottom here. Then after, we have to add everything from the month of January, where we have 8,000 plus 17,000 plus 10,000 plus 250,000. We have 285,000 rands. So now this will be outflow in this month, 285,000. 285,000. Then after, the second month will be 10,000 plus 17,000 plus 10,000. That will be 37,000. Then we go to the next month. we go to the next month and up to the last month. The next month will be 36,000 plus 12,000 plus 17,000 plus 10,000. That will give us 75,000. That will give us 75,000. That will give us 75,000 rands. Then the next one will be 24,000 plus 14,000 plus 17,000 plus 10,000, and this gives us 65,000. Then after the next one, it will be 28,000 plus 16,000 plus 17,000 plus 10,000. It will be 71,000. And the last one will be 32,000 plus 18,000 plus 17,000 plus 10,000. It will be 77,000 rands. So now we have recorded all that was needed. Then we'll have surplus slash deficit. We'll have surplus slash deficit. It will either be a surplus or a deficit. Then after we'll have a balance brought forward. Balance carry forward. Balance carry forward. Then after we start from the inflows, and we say we have inflows of 300,000 in the month of January, less 285,000. That will give us 15,000 rands. And 15,000 rands will be a surplus. We record the 15,000 rands. Then after, it will be a balance at the end. It will be a balance at the end. Then after, we say the cash inflow for this month of February. Cash inflow for the month of February is only 19,600. 19,600 minus the outflow of 37,000 rands. That gave us negative 17,400, which is a deficit. Negative 17,400. A deficit of 17,400. And this will be plus 15,000. Then the deficit will decrease to negative 2,400 as the balance brought forward. Then after, we continue to the next month. In the next month, which is the third month, we see the inflow being 43,500. 43,500 in the month of March, less 75,000, which is the outflows. 75,000. That gives us the deficit of 31,500. It gives us a deficit of 31,500. And we also have a balance that was brought forward as a negative. Therefore, now we add the 2,400. Then it will increase our deficit to 33,900. Increases our deficit to 33,900. Then after, we say our, once again, next month inflows 53,150 less 65,000. This gave us 11,850 as the deficit. Once again, 11,850 as a deficit. Then there's another deficit, which was the balance brought forward of the deficit. To add that, which is negative 33,900 as another deficit, and that increases the deficit to 45,750. 45,750. Then now we go to the next month. We look for the cash flow, and the cash flow in the month of May will be 62,800 less the outflow of 71,000. Then that will give us 8,200 of the deficit. Once again, another deficit, 8,200. This business is not doing so well. Then after, we add the deficit to the balance of the deficit that was brought forward of 45,750. and that gives us 53,950. That will be 53,950. Then now we do the last month, and the last month is having cash flows of 72,450. We less the outflow of 77,000 rands, 77,000 rands. That gives us a deficit of 4,550, 4,550, and we have to increase our balance deficit by 4,550. Then we say plus 53,950. This will give us 58,500. This will give us 58,500. So now this will be the balance that will appear in the bank account by the end. 58,500 is the balance brought forward or carried forward. So now these are the deficits that the company has been experiencing through all this month. So now with that, I've covered all that was necessary in this question, and I've shown you all the calculations, and I've shown you all the workings, and from here now you're supposed to be able to attempt all other questions. And with that being said, on my side, I have done all that I was supposed to do, and I hope you will have learned something in this question, guys, and I thank you for that.